Well. Can I say anything but the color behind me for this week? It is really bad out in the markets today, guys. An important level I gave you just yesterday already broken. And did I expect that to even happen in one day? No, team. Let's take a look at what's happening here. All right, so the SPY now down below major levels. I had drawn this line a while back. I created this right here just to kind of show you guys this 50% retracement level, but I had drawn this line way back, right? We were looking in just yesterday. I wanted to show you guys, would we go to the 61.8% retracement, which was the 410 on the SPY? We're below that now. We're at 409.50s. This is looking terrible. Terrible is the word to use because it's not just one area. It's a lot of areas just getting smacked. Look at the Qs now. Qs are about to break that 200 moving average, the exponential, and could be starting to really start to pull back. This is the one that can really kind of turn things around and make things seem a little bit better. But the truth is, depends how you want to view it, right? But we can draw the retracement also to see where this is going to go ahead and retrace to. We've gotten through the next level. So this kind of levels here. Of course, we can watch for maybe the 38.2, but it's seeming more possible that we're going back here towards the 50% retracement. And that's going to be a level down towards 324. And what would happen if that would happen? Well, I see NVIDIA back down into the 380 spot, maybe eventually towards kind of 320s. We'll see what happens there. But the truth is, and you guys can see it in the technology XLK here, it's not looking pretty, guys. And we kind of double topped here with a nice little head and shoulders, and now are starting to really break down. Amazon, that was doing really well today, is now starting to fall off. Will this go actually below, maybe even before the close here, below the open? That's going to be looking really ugly out there. Take a look at Microsoft. It had a good report. Today, it finally starts to bounce. You don't think the bulls thought that finally we're going to drive back when it made this move? Hell yeah, they were out there. I was on that boat. I even myself have been looking at this one to see if it starts to work its way back. But another leg lower, and what are we doing? Crushing through the open again, and now down to 328. This isn't looking good at all, team. And I've talked about the negativity that I have in Tesla. I think Tesla could go lower. I think this could be right back into the 150 range. Who knows? Maybe it even comes back down below the 150. I'll tell you one thing. I think Tesla might never get back to 400. Ooh, that's a tough saying, but I definitely do think it might never get back to 400. I don't know how Tesla investors feel about that. Let me know in the chat. But take a look at Google. Google is all the way back down from where it was just looking like it wanted to go to new all-time highs. And now we're in what? And this is not going to be exact, but like about a 13% retracement, almost already in a bearish market, right? 20% from the highs and about to start cutting through that 200-day. And when did we draw this? We drew this before the earnings came in. Would we come into this space? Right there. We're right back into it. Now the only question is, will we stop there or will we just keep going lower? That's really signs of concern. Apple going for another leg down, now back 61.8% retracement from the highs and starting to hold there. That's the next level to watch, right? But if we can't hold that, we could go right back down into the 150s. And if we're right back into the 150s, things don't look nowhere near as bright. All right, let's take a look at what's going on in the chat here. It's good to see you guys. Gerald, another beautiful day in the SPY, bearish day. It's ugly out there, man. SPY can't hold any level right now, it seems like. Marty, it's a no from me, dog. pull the bandage off, flash crash, and Powell lowers rates and we'll get higher inflation. Yeah, the truth is that right now, Jerome Powell doesn't really have ammo because he hasn't gotten inflation down to 2%. So if you guys think that the Fed would come in and save them, I'm telling you guys right now, the market would have to really tank for Jerome to come in here and save us. Because the truth is, weren't they raising rates when prices were down on the SPY at 382? So why would they pull the bandage off? I don't think so. That's not what I've seen from the Fed. The Fed plays the extreme game. Right now, they're playing the extreme restrictive stage, and they're going to hold at that until they break this economy. The truth is, that was their plan. If they can break the lending, break the economy, then inflation can truly get back to where it belongs, 2%, right? We'll see what happens there. It's not something that you want to hear, but the truth is the Fed plays the extreme game. And what brought us up to this move was this big old hype in AI. And I'm sorry, team. I know that everyone keeps telling you about that AI is like the next .com boom and going to continue growing and things like this. The truth is, yes, it will continue growing, but at what pace? Just like we talked about the metaverse and we talked about NFTs and we talk about cryptocurrency, things come in waves. And yes, everyone's going to tell me NFTs, cryptos, blockchain, all that is not what AI is. Well, the truth is, it's a technology advancement. And technology advancements, they come in waves, guys. They don't just go in one wave and then we just keep going in that wave. They come in waves. So we've gone through the first wave, which was a nice boom where the early adopters stepped in. An early adopter does not mean that the majority is using AI right now. Will we move to the point where majority of things are run through kind of AI products and language models? Yes. And large language models? Yes. But the truth is, that's not on this wave. At least I would say so. And that's why I was saying really quickly from when we were at the top, what was I saying? Show me the money in AI, not necessarily the products and the hype. But that's the important thing here is that we're noticing, I think, that the AI hype is not only dying, but is dead. And so I don't feel that NVIDIA can hold on here. I think NVIDIA could easily be right back into this 200-day moving average, which is a move at least towards 365 right now and could be in this gap in no time. It could be even in this gap next week. What's it to have to wait for the earnings? It doesn't have to wait for the earnings, especially the way things are looking like. It doesn't look good here in AI names. Even Adobe, which I will tell you guys, I believe in their AI products, right? I use it. I can show you guys that right now. I could go to Adobe Express and use one. But the truth is, even Adobe is seeing the downside turn. Why? Because yes, they're adding features and this is going to maybe bring a couple customers. But is it going to bring thousands and thousands of customers to Adobe? No, probably the same customers that were using it in the past are using it now. Will they use some of the AI features? Yes, but is this just an overwhelming jump to the revenues? I don't think it is even for Adobe. So what makes it these big hype boom, right? The .com era. The truth is, it's not much there, guys. And it's just kind of be hype. And it gave us something to believe in. And that's what they want to do sometimes. They want to give us something to believe in. The truth is, let's take a look at what's been happening in the markets as of late. And I'm going to try to stick to sectors outlook. Look at healthcare. And we're going to go to the healthcare chart. Look at that. Now we're right back down here towards kind of the 23 March lows. And we're even coming back here, starting to come back into kind of 22 pricing and could easily be right back down where we were on the lows on healthcare. And this is looking like not a rounding bottom, but a rounding top. Not a good outlook. Yes, sometimes we get rounding bottoms, but this is a rounding top. And it is not looking good here in the healthcare sector. Why? Because a lot of the times these guys have to borrow money. And if money is going to be more expensive, well, guess what? These companies aren't going to have that rosy outlook. And I remember just even last week, and I'm sorry, but today's one of those days where I should have just named the show Mitch is Burning, because the truth is I'm burning up here, guys, burning up with comments because I have to unveil. It just seems like there's a lot of hype out there, a lot of speculation, but everyone was talking about Lilly and everyone was talking about the weight loss drugs and how it still seemed like an opportunity. Does it seem like an opportunity now? I mean, now if you got it on the discount, maybe you can come after it here. But the truth is, was it an opportunity last week? Hell no. It was a chase. And there's so many people talking about this. But Ozempic is going to make these stocks go through the moon. Well, you guys are seeing it. Got to understand what's really happening in the current environment. My number one takeaway today would be to ask yourself, what is going on in the current market environment? And why is the market reacting like it is today? All right, but let's take a look at what else is going on underneath the hood. It's not just these healthcare companies, right, that are getting the hit, right? Let's go towards the XLI. Let's go to the industrial sector as you guys are seeing this turn around. Take a look at Caterpillar, which was just right now, recently, was looking really good. Take a look at this, guys. Even on the 17th. Where are we? 10 days off of this. Cat was looking like, okay, we can go back to 290s. We are down on that day from the high on that day to where we are now, about 14% down on Cat. Take a look at Deere. That looks like it just fell off a tape. And then there's a lot of fake outs here happening. I talked about this fake out yesterday on Picard, and how this was trying to go back up, but it could easily come break back down through that 81. It does not look good. And Lockheed Martin and these defensive names are the only thing that's holding up these industrials right now. If these names let go, where will the industrials names be? I'll tell you one thing. Watch out, because XLI keeps falling off. And now, where are we back? We're back below January prices from this year. So we're not essentially going to have gains in the industrials. And this is why it's also so important to stay with the groups and the rotations, right? Real estate, it might have looked like it was bouncing yesterday and was going to start getting an up move. But look at this. It gets the smallest little move up. And today, take out of those lows. Guys, I can't say it enough, guys. I'm trying to point to the negativity in the market because sometimes it could seem like things could turn around. Things might seem rosier than they are. The truth is, things are bloody red right now. And we need to do what? Protect ourselves. That's why this thumbnail on today's video was what? Cash is king, team. Because cash right now is king. And if you can save and, put it in a cash account, make 5%, why do I need to be going into the market? The truth is, I'm an everyday trader. I swing trade, day trade, guys. And I can tell you right now, are the opportunities making sense in the market right now? No, they are not. If anything, maybe to the short side. But other than that, there's not much out there that we can even look for safety. Because there's not much out there right now. Look at the defensive names even. You're like, well, maybe I can go after defensive names. Well, look at the defensive names. The consumer staples, they're going lower. Where do we go in this market? The cyclicals? Oh, those have turned around. Where do we go? Financials? Oh, now we're really talking blood red. Look at that, guys. Really taking a hit. And I think this is just going to continue to happen. Take a look at the XLF today. Does this look good? I don't know about you guys, but this just tells me, watch out, guys. And this is why exactly I did my video this week and I put it out. And I don't want you guys to miss it because the truth is, I don't even need to take a trade in this anymore to see that it's working. The crash could be right around the corner. Who knows? It could happen at any moment, especially the regional banks. There's no reason to lead me that these banks are coming back. Take a look at the KRE, right? This doesn't look good, guys. This looks like it really wants to go ahead and break down through those May lows right here and continue coming down. And there's a lot of banks that could be in trouble. WAL, of course, on my video, I just recently talked about Ozark. So if you haven't seen that video, you might want to check this one out because I feel like this still has an opportunity here to crack the 35 and make it back down to the 31. There's another company on there that I already made money on, but we're not going to get into too much of that. Of course, you guys can watch that video on the financials, but it doesn't look good in the bigger banks either. Look at Goldman Sachs. This was the March low, and I'm going to put a circle on it so you guys can see it on the chart. Is this a good looking chart? No, team. It's telling me, at least the chart, run away, run away. At least that's what it seems like. And then take a look at Bank of America. Right through those lows. It tried to come back to 28. Another low today. Not looking good, team. Take a look at Morgan Stanley. Another leg down. Where are the lows here? This one, forget the March lows. We're through the 2022 lows. This is incredible, team. Just take a look at that. Now we're back down below this. This is not looking good. So even on this, that was the 22 low, we just broke through that. And Morgan Stanley looks like it's going further down. This is not good in the banking situation. The truth is, the banks are against the wall right now. The Fed is pushing them back against the wall. And they only have one option. Hang on tight. Because if not, these banks could go. They could start with regional banks, and global banks don't mean that they're all safe. I know that the government loves to step in here and save these banks, but it's looking like they might have to step in here and save them again. And that's not good outlook for the overall market. Let's keep going, team. It doesn't just end here in the financials. We can keep looking. Where do you want to look? Okay, so maybe we can go after deflation. We can go after materials, right? The inflationary that was hitting those. Well, you guys can see it. I've been talking about how basic material has been falling off, and I don't see this turning around. This tells me that deflation could come in here. The only area that maybe could start getting a lift here is what I played earlier this week, which was gold. Because I love gold, baby. And I think that might be the best play right now is looking at the safe haven that is gold. AU, one that I'm thinking about, maybe even taking a swing trade over the weekend. I already made money this week on a swing trade on AU, so I'm going to stick tight right now. But GLD recovering today, right? FNV, NEM, nice recovery there. Will we start to see a lift in gold? The reason why I'm looking at gold, you guys in the chat, I'll put you to the test. Why would I be looking at gold in an environment after kind of a crisis time, right? Well, if you guys know, during the 2000s, of course, when the dot-com era kind of blew up, right? For the next 2 years, some of the leading stocks that were up were what? They were gold stocks, of course. So you guys can take that knowledge and look it up if you guys don't believe me. But the truth is that this is something that we need to know so that we can expect in times of crisis what type of stocks could get the lift. And this is why I think overall you're seeing maybe Bitcoin get that move that it got. Last time the KRE and the regional banks had this concern, we saw Bitcoin make that move. But the Bitcoin stocks are going to be just as hard to catch. Look at this trick on coin. And I'll call it a trick because I can't blame you guys if you went after it. It looked really good here, right? Whether you want to think about it or not, right? I'm going to erase some lines here so that we can kind of take a look at it. But man, it just, I mean, you guys can see it here, right? So it went above this trend line, looked like it wanted to break up to the upside. And then what? In 3 days, you're right back down. And now you're breaking through that support, getting right towards that 70. And coin could be right back to 60. So just be careful out there, just trying to always catch the next hype move, because this was the next hype move and it got the rug pulled right underneath it. So be careful out there, traders. It's not just going to be just one way here either. All right, but it isn't looking good either in other areas. Someone wants to call out MasterCard. You guys know I've been talking about this one, and I've been pulling it out and saying that this does not look good, and it could reject this 387. This was a head and shoulders that I talked about on Monday. I'm not talking about, yesterday when it was already down here on Thursday. I was talking about this on Monday. So this is the things that you want to catch, guys. Visa, I said, was on the same looking pattern. And I thought MasterCard was leading Visa. So now how does Visa look? It starts to come back. It starts to reject there. Head and shoulders top. Doesn't look good out there, team. All right, guys, definitely let me know what you guys are looking at. COF, I mean, it kind of held its gains, but you know what I can see here? I can see it just coming up here and getting shorted into, right off of this 98. So the bottom, the support, is becoming the resistance here. And this is the third try. It could easily be right back down to that $88. We'll see what happens on that Capital One. But definitely, the market is getting ready for war, maybe even potentially, or worse. Who knows? The truth is, we do not know if we're going to be in World War III. But the truth is, right now, is there really a probability? Yes, there is a probability. Is it high? I wouldn't say maybe high. But the truth is, there's a lot of uncertainty in the market, a lot of kind of problems that are out there. And if we think that oil can maybe save us, look at this move. Another leg lower there. Look at Chevron. Oh my God, this got hit today hard. Wow, what a nasty move there in Chevron. Let me just take a peek at WTI. Where are we? Man, we did a down move to 83 and then back up to 85. The volatility is even in the oil markets, team. What's going to happen here? Will we go back into the 90 handle, or will we go back to the 70s? That's a tough looking chart right there. And this is why I draw all the time, guys. I drew this box here. I even tried the long Chevron up here for the breakout towards 170. This is why you cut it. I cut it on this candle. Imagine if I didn't cut it on that candle. Imagine, guys, I would get wrecked. Let's just be honest. I'd be down 12%. Got to be careful in this market, team. And things that trend down when they break. So like this one, I don't like it anymore, guys. I liked Valero as I wrote it up here for this break. And now it's looking like it's rejecting this and could easily be right back down into the 110s. We got to be careful. And wheat rally, I would not expect that at all either. Take a look at wheat. I think we're going to see what? You're going to see demand go down, not increase. And that's the problem there. Yes, is there still some supply issues? But the truth is, those have worked themselves out. Just like the UNG traders, right? Natural gas traders always try to tell me that this is going to make a huge move. The truth is, has it made a big move? No. This is why I ignore the natural gas move. It just doesn't get the lift. All right. And it was the Hess deal. Yeah, I agree. I agree that the Hess deal didn't help it. But the truth is that when the two top names are getting hit like they are, XOM and Chevron, are people going to be viewing oil as bullish? No. Look at the XLE. So this is why I can't say it's just the deal, Jay, because look at the XLE. That includes a lot more, right? That's taking a big hit there. We'll see what happens, guys. It just doesn't look good anywhere in the market. Wherever you want to look, even utilities. I talked about this yesterday of how this was kind of setting up for a nice short. And it was, team. We literally were looking at this yesterday right here and looking to see if the 60s would reject and it'd start to make its way back down. That's why I talked about maybe getting short like Duke Energy and maybe like a Nextera Energy. Nextera is actually not looking too bad still to maybe get the short on there. These areas, they all just don't look good. And what about Gush? Gush is soon to look like you should be trading the drip, not the Gush. Right now, it's looking like drip is getting the move. And look at all the volume that has built into that. And you could see what declining volume. And now that you've kind of really started to stabilize, you're going to look to see if we get a big increase in volume as it starts to really push above 11s. I would really be keeping drip on my watch. As a matter of fact, I'm going to put an alert here for 1097s to let me know when drip starts making that run. And it's just like it is everywhere in this market. You guys can name a stock. I probably won't seem as bullish. And Kathy, you might need to start hiding underneath your desk because investors are going to start calling. They're going to start calling, man. They're going to start trying to take their money out because, Kathy, I don't know if you're going to survive this financial crisis because there's a lot of zombie stocks in her portfolio. At least I would consider them. And let's take a look at some of these, right? Let's take a look at what's underneath Kathy Wood and what is in her wheelhouse, right? I'm going to pull this to the left a little bit so you guys can see a little bit more of the charts. And I'll rewind a little bit. I'll go to the dailies so you guys can see it. And I'll take the lines off. But do these charts look good? Look at SHOP, Palantir, Square making new lows, 40s. Zoom continuing to decline. Coin right back down. TER right back down. EXAS, Unity, Twilio, Path, Hood, Roku. These charts just look atrocious, man. It's almost like what not to hold in a long portfolio. If this was a short portfolio, man, she'd be killing it, dude. But the truth is, this is the long portfolio. This is not looking good, team. Kathy better hold on to her shorts because they're about to get taken off. Man, it just looks like, holy moly, what is going to happen here, guys? Roblox looks like a nice short here. I mean, Path, I remember she was adding on this thing at like 18, 19s. We're right back down to 15. Just doesn't look good at all, man. And Warren, what you want, Warren? What, you want to go after Oxy? You want to go after Apple here? This is also the conversation. I even said it on Dennis Dick's tweet that Warren hasn't really done a good bet in, at least in my trading career. Maybe if you look back into the 80s, but I mean, honestly, what is Warren? Warren's Apple. I don't see anything else. And I know some people are going to hate me on that because Warren's such a prolific investor. But the truth is, that's back in the days. That's not the markets that we're in today. All right, let's keep going, guys. The only thing disruptive about Kathy Woods is disruptive that's happening into her investor's account. Yeah, it doesn't look good out there, guys. And I remember Dow was doing really good. That's holding on. Can this hold on to this gap? Oh, man, this looks like a short opportunity within itself. Oh, I'm going to have to watch this one. Especially if we get another bearish day like we've had. I'm going to have to put this one on my radar, guys. We'll see what happens. If it gets to 67, yeah, I'll set an alert there. But really, I'm looking for this move back down through 65 because it could be a real kind of wipeout move there. All right, let's take a look at what else is in the market today. Of course, you guys have me for about another minute or two. It's 4:04. I'm about to get out of here. I got to get you guys over to the Dales report. That's coming up next. As a matter of fact, I'll just leave it here, guys. It's been pure red out there. And the big reason, all the sectors don't look good. There's not a single one that looks good to me. And that within itself should tell you this market and how it's been this week. So be careful out there, team. And if you haven't taken a look at my video, go ahead and check it out, guys. I'll throw up the link for you guys to check it out. I don't think I could have picked a better week to come out with this video, especially the way that we're seeing the markets react right now. So there's the link there. Throw it up in the chat. I will see you guys over on the next show. That's coming up next. Don't go anywhere, team. We'll bring you guys over to the Dales report. They're going to be talking about what's going on in cannabis right now. There is a pretty good lawsuit that I even want to hear what's going on in. So don't miss that, guys. That starts at 4:10. I'll see you guys over there. And like always, stay right here on Benzinga to stay up with all the information. Stay tuned, stay informed, stay subscribed, and of course, stay safe out there, traders. It ain't looking good. I'll tell you one thing. It's definitely going to be a weekend that I'm going to try to forget about the market and come back on Monday and see what we can come up with.